All right. So again, thanks for everyone for joining us for this special session. We're going to talk about the individual LTC and hybrid markets. We're going to look at what's the best-selling products today, and I'm going to share with you some of the data from LIMRA on 2024 results. But also, we wanted to use that as a sounding board to kind of look at where is the market headed? Why are the carriers growing the way they are? Kind of what are the underlying dynamics? And also screen share the Benefit Buddy portal so we can take a look at where you can find more information about all the carriers in the market today. I'm joined by the lovely Wendy Bolio. Wendy is my partner in crime for today. And Wendy, I hope you don't mind. I'll kind of throw out some questions for you to give insights, but you've been in the industry for nearly 30 years, right? You've seen a lot in your time. And I'd love to get your perspective too on where you see the industry headed based on, where it was back in the day with Genworth and where, we're seeing it now with the individual products starting to create some innovations.
Oh, so that's a question right now?
Well, if you have any general thoughts to share, go ahead.
I do actually. And I'm looking around the room, right? There are plenty of people that have been in this industry almost as long as me and longer. So you've seen exactly what I've seen. I think the most striking is the younger ages that are buying long-term care insurance. They are the Gen Z and we used to be called that. I'm a baby boomer, but we were used to be called the sandwich generation, but it's Gen Z, which is really caught in the middle, that age of 45 to 60. Mark, as you know, on the group side, average age of an employee buying a long-term care group policy is 45 years old. And we're seeing that on the individual side too, because they feel the effects, they've known the effects. I think that's one of the biggest things. Women, 30 years ago, we're buying the majority of long-term care insurance. That is still the same today because they understand that. And I know that you and I are going to talk about that women market here in a little bit as well. But I think those are the two biggest. Younger, definitely, than 30 years ago. And women being really still that driving force. I think the products too have changed so much. I mean, back in my day, you really had to be pretty squeaky clean health-wise in order to buy an insurance policy. Today, that's not the case. You can do the short-term care if you've got health issues. The hybrid has less underwriting on the individual side. So the opportunities are there. I think it's narrowed down too. God, when I first came in, there were 133 long-term care insurance carriers. And today it's narrowed down to the best of the best. And they're really competitive. The pricing is really competitive. So it's been really exciting to see that broadness and yet contained with the carriers, that they're constantly competing against one another to be the best that they can be. And it's helped the carriers out to be the best that they can be. I think today also carriers have listened much better to the consumers than they did when they started 30 and 42 years ago. And I think that's been a big push as well.
Yeah. We always stand on the shoulders of giants, and we really value what the long-term care market trailblazed for us, both in terms of product innovation, but also like technology and the customer experience and agent portals and e-applications. There's so many ways in which we're so much better off today because of all that hard work before us. I'm going to go ahead and share my screen, Wendy.
Yeah.
And for those of you who haven't seen it, in the Buddy System portal, which you can get through our website, buddyins.com, once you have access to that, we have something we call the Individual Product Buddy. And we have 4 different types of long-term care products that we think of as long-term care planning solutions. We're very agnostic, right? Whichever is the best fit for the client really depends on their needs and their budget. But you have the ability to kind of choose the age of your client, the state your client's in, their health, and how they're funding their plan, whether it's a pay-as-you-go or whether it's more of a lump sum payment. And this is going to change the order in which you see these results. So we've kind of created a little bit of an algorithm to help recommend a starting point. This is not to be like an automated engine. This is to give you some ideas to run with, to give you why it might be the right fit for your client. So it lays out why these particular categories are the right fit. And also it shows you which carriers are available in the category. So Wendy, I'm going to start with traditional long-term care. And we have, I would say, 4 leading carriers more or less in the brokerage space. Bankers is kind of a little asterisk because you do have to be a career agent to sell it, but it's got a very unique product. And I'll show you why we're interested in that product. So um, this is the LIMRA data from 2024, year-end 2024, just to show you what are the best-selling products in the marketplace. Look at who the number one product in long-term care is by policies sold, and it's not even close. They sold 15,000 policies, traditional long-term care policies in 2024. Next most was 7,000 from Northwestern, more than double the next competitor. Last year, they only sold 10,000. So when you look at the growth rates here, right, a lot of the carriers are still kind of shrinking in terms of their new policy sales, but there's a couple of carriers that are growing. New York Life is one of those carriers, and Bankers is really the other carrier in the space. So I want to talk a little bit about why that's happening, but you can see across the board where that growth is coming from. So I'm going to come back to this in a moment. Again, we support all the carriers on this list. We want to have more options in the marketplace. But even when there's fewer options, we see some of those, brokerage carriers still shrinking in terms of sales. And they really have to find ways to innovate because consumers are demanding something. Advisors, agents, specialists like us are demanding better products so we can make it easier to offer to our clients. So we go into all the different types of products. The reason why Bankers, in my opinion, is growing so much is that they've rethought their long-term care model, and it almost looks like a short-term care model. By that, I mean a lot of their products in most of the states are 366 days of benefits, 1 year of benefits. Simplified issue underwriting, where you can get a case approved in 1 day or less. More of an electronic type of application experience, right? It's all those things that we've talked about that modern younger consumer, even like Wendy was talking about, really is demanding, right? They don't want to go through an 8-week underwriting process. By the time they finish it, they've forgotten what they purchased, right? We talk about, we have a 7-second attention span. Well, 8 weeks is too long, right? So really have to get those timeframes down. And I think that's why you're seeing a lot of the growth that you're seeing with Bankers. And they're also really pushing it. I think a lot of the carriers in the marketplace, while you pointed out the best of the best still remain, they're not as hungry for the business because they're still kind of burned by the risk of the past. So, right? So they're not necessarily trying to acquire more business. They're trying to more cherry pick and try to get the best risk on the books and the most profitable business. So it's less about growth there. I'm going to segue into the Life with the LTC Extension Rider segment. And again, you can see the different features as to why it might be available, but we are seeing a lot more innovation happening with these hybrid products. We know One America just came out with some new features on their policy design. I would say from 2024 to 2023, I won't show the numbers, but I have seen kind of some of the high level numbers. I would say One America probably wasn't growing as much as their competitors, and I think all those product changes that they made were in response to that. So they're really doing things to make it more attractive to buy their product. The biggest carrier, though, that grew in 2024, probably no surprise from those of you on this call, was Nationwide. And why did that happen? Well, they came out with that joint survivor product. They got more product options available in California and New York, right? So they have more availability for clients, and they're very competitively priced. So the underwriting is getting better. We had Alan Gregoire on, right, to talk about Nationwide's underwriting a couple of weeks ago. And he's finally putting out, a more detailed field underwriting guide and trying to figure out how do we make it so that fewer clients have to go through face-to-face exams and interviews, right, making it more of a modern experience. And I think their sales show it. I think they jumped 50 to 100% in 2024 because of that. Now, Thriven is still on this list, but unfortunately, I don't know if many of you heard it, they actually decided to take their hybrid product off the market. They weren't seeing enough sales penetration, so they'll just have their traditional product. But it's interesting that they took off the hybrid product and weren't able to effectively compete in that space. Maybe because they have such, strong competition right now in the hybrid space. And we did see a lot of growth. Securion's not on here, but Securion was another carrier that grew a lot last year. We think Nationwide is still kind of more competitive in terms of their new products, but I think Securion has a really good niches too. And Bright House, which is the other cash indemnity carrier, is also growing quite a bit. albeit through limited distribution. It's harder to get access to their product because they're not looking to sign up as many distribution channels to sell it. So just kind of continuing our survey, Wendy, any thoughts before I jump into the other categories here?
No, I am surprised with Thrivent though, right? I've
Yeah.
done so many webinars with them over the years and they're such a great company, but I mean, to your point, you got to be able to make it. You got to be able to make it. And it's a competitive world and they just felt that that wasn't a fit for them. Um, no, I think this is really great, Mark, because we know all the carriers. We've worked with all of the carriers on the individual side and then on the group side. And the strength is just so important. Used to be if you're not an A plus company, you're not going to make it. And now you've got A-rated companies, A plus that have been in there for a long time, got companies that have seen rate increases. But you know, it is interesting, and I think I've told people on this call as well. I'm a Genworth policyholder since 2001. So a long time being a Genworth policyholder and seeing those rate increases and hopefully that they're all leveling off. But you know, I talk to clients all the time about that. And I think that's one of the biggest beefs about it, Mark.
Hmm.
As anyone and everyone on the call, you get those calls about what the heck is going on and how do I combat the rate increases and how do I know it'll never happen again? And you know, you always in individual sales, just like on the group sales, this is solution driven, I think, much more than price driven. And I always point to that when I'm talking to clients. What is, you know, what is the solution really that has helped you? The price is there and people can figure that out. But really, if they really have found value in that and walking them through that, I haven't had one client, and I've got hundreds of Genworth clients that have bailed.
Yeah. Jeff had asked a question about Lincoln as well, and I shouldn't forget about them as well. The one thing about our tool right now, just because this is our first release, is we can only show the top four. So as soon as we take Thrivent off of that list, I think Securian and Lincoln will pop up here, Jeff. Now, we do like Lincoln. They have grown a lot, mostly in the variable life space, though. So they've really pushed the Lincoln Market Advantage product. And we're seeing they have a lot of growth there. They're doing really well in the financial institutional space in the wirehouses, but not as much with the buddy, I'll call it a BGA community, mostly because you have to be securities licensed to sell it. And many of the folks in this room and many of the BGAs are not securities licensed to sell it. So I do want to, it's a good point to point out Lincoln is doing well. And I do think there's a lot of innovation in their, especially their market advantage product. It was definitely designed and thought of very differently in terms of the approach to the market than these other carriers. All right, let's jump into the annuity long-term care space. As many of you know, we're big advocates for this space for a number of reasons. Again, you'll see why this might be a fit. The biggest one in my mind is that for those 65 plus year old crowds that have assets, the ability to reposition the asset through a 1035 exchange or just as a cash purchase and get potentially very limited underwriting and get leverage is phenomenal. We have unisex pricing in this space. You can buy it for, let's say, a 70-year-old female and probably get more long-term care benefits for your dollar than any of those life plans out there, simply because the life insurance gets more expensive and the annuity plan gives you 3 times leverage, and it's really not looking as much at your issue age. So I just think the value proposition is there and it just fits for that asset repositioning sale. We also like that newer Equitrust product because it has a guaranteed issue option as well. So you can get less leverage, but if you have significant health conditions, you're always going to get a policy with Equitrust. You're never going to be turned down. And if you pass the health questions, the limited health questions, and the 25-minute phone interview, then you'll get the 300+% leverage as well. So I like what they're doing, and I do expect to see more carriers in this space. We've heard, carriers like the Nationwides of the world are going to be looking at this space to release new products. So I think this is going to grow. Again, right now we have 3 carriers: Equitrust, Global Atlantic, One America, but I think you're going to see 4 or 5 carriers in the very short period of time here. The other segment that we've kind of alluded to a little bit is short-term care. Again, Bankers is kind of a unique traditional product because they've designed it, filed it as long-term care, but they've really made it work like short-term care. The biggest limitation of short-term care is the fact that we can't get it in all states. We really only have 35 to 40 states where the regulators will approve it. But in those states, it's a phenomenal alternative to traditional long-term care. Again, tends to be more for that 65 plus crowd that wants a pay-as-you-go solution, something that's affordable. But they do go down to age, 50, 55 with most of these carriers. Simplified issue underwriting, very quick approvals, and now they're competing to offer more and more benefits. Every time we talk to them, they're adding to the coverage there. So from my perspective, it's a great solution for those that don't have any plan at all or are looking to fill a gap. Short-term care is a great way to go. And if you're newer to long-term care, we oftentimes will recommend this to you too, just because you're going to have just better outcomes. It's easier to work with, more Swiss Army knife. Those in the Medicare space, especially, we see there's a big potential to cross-sell short-term care to your Medicare clients.
So Mark, on all of the carriers that you've talked about, and I don't know that you can actually say this, but what are the ones that are the easiest carriers to work with? I know what it's like on the group side, but on the individual side, what do you see? Or can you not say?
No, I think they all have trade-offs, right? They're strong in certain areas, weak in other areas. In my mind, the easiest to kind of get applicants approved and issued is going to be your short-term care, right? The application process is very simple. Quoting process is very simple. People can get something affordable that's easy for them to understand. If you want something more comprehensive, though, you really have to go more into that, traditional life LTC space. The annuity space as well, has its nuances. The application process has a little bit more steps to it because you have to do suitability, for example, but nothing that I would say anyone should shy away from. But in general, when it comes to process, you can't beat, the short-term care process in my mind.
Thanks.
Mark, somebody asked if you've heard any word on when Genworth might enter the market.
Yes, yeah, great question. And that's a great segue into new carriers and where is the market headed. So Genworth is one of those carriers we're closely watching. They've rebranded the company as Care Scout. So if you hear Care Scout, just remember that's the same thing as Genworth. It's just going to be under that brand name. And they did file, and I believe they're getting approved that product in the second half of this year. So they're already going out to distribution and trying to figure out, who are going to be the lead sellers of their product. So I would encourage those in this group to reach out to learn more about the product. It's going to be a traditional long-term care policy, individual oriented towards individuals at first. We're still trying to learn more about their sweet spots. I think they're going to be priced kind of middle of the road in terms of the competitors. But I think they're going to do some smart things because Care Scout is not only the insurance company, but it's also the services that they kind of connect with providers. So they have like a preferred provider network and be able to bundle an insurance product with providers that are kind of been endorsed by the company can solve other problems, holistically for the clients. So we like that potential. And for those of you that have gone into the community partner section, for example, with us, we always are trying to think about how do we bring in other value-added services like our community partners. And I think that's the path that Genworth is pursuing as well. So great question. And again, let us know if in the chat if you've seen their product and have any other thoughts as well about where they fit.
So Norma said that she's still using their calculator.
Yeah, the cost of
way to
care
go.
tool is still the most popular cost of care tool. If you just
Yep.
Google search Genworth cost of care, we use that all the time. In terms of what they built technology wise, second to none. They were at one point and still have the largest in-force block, right? But as the largest carrier, they invested a lot in the infrastructure, and I think it shows. It's funny how even probably 15 or 20 years after they built it, right? It still remains the most powerful lead generation on the web is probably Genworth cost of care calculator.
So Mark, quick question that came into the chat. Do you think that Genworth is going to go back into the group space? It was there when I was a wholesaler for Genworth. What do you think?
Yeah. I think most of the carriers you're going to see going forward are going to try to get involved in the group space in one way, shape, or form. And the reason why I think that is The numbers don't lie. There are going to be more people getting long-term care through their employer this year than the entire individual market combined. That was not always the case. Back 20 years ago in the heyday, the majority was individual policies. Even though there was a robust group market, the individual market was far more popular. Today, the group market is far more popular, and if you want to kind of catch that wave, and have those tailwinds, you should be building products designed for it. So I think Genworth Care Scout is going to get into the group space. I think not initially. They're going to start with the individual market, but they're probably going to kind of design their individual product more for small groups for worksite.
Mhm.
And then it's very likely they'll actually file it, maybe make it a true group product thereafter. Again, these things take multiple years, but you can
Right.
almost see that that's where they're likely to be headed, especially Wendy, given their experience in the group space, right? It's not like they're a spring chicken new to that space, right? They know it inside out. They already have great employer relationships
Yeah.
to leverage. And I
But you
think,
look at Unum, right?
yeah,
You look at Unum and where do they stand on the group side?
yeah,
Because we run
Unum,
into those policies a lot.
yeah, there's a lot of different legacy group carriers out there. Unum mostly discontinued new groups a decade or longer ago, but they still allow new employees with existing groups to get coverage. So
Right.
people are still getting new Unum policies. However, Unum did sell its or reinsure its traditional long-term care book of business. So I think they're focused much more on the hybrid side now. They just came out with a LTC rider on their group life product. So we're seeing a lot of carriers taking that path of doing the hybrid, right? Group life with long-term care, kind of like what we see in the individual market. We're seeing some carriers, because there's a void on the group traditional space, looking to jump in and be the only carrier offering group traditional policy. That's a good place to be too.
Yeah.
Life Secure is there, but as you saw probably on the sales figures, not growing very fast. Doesn't really have like the same value proposition as they used to. Simplified issue, not guaranteed issue underwriting. And I think there are going to be traditional products that are going to explore guaranteed issue underwriting. We know of another new carrier too, Wendy, that's going to file a group traditional policy that should be available at the beginning of next year. So I think that, again, they're seeing where the growth is happening like we are. They're designing products to meet that customer demand and the agent broker demand. And I think you're going to see both the hybrids being very, very popular, and you're going to see a couple of traditional solutions kind of dipping their toe back in.
Sounds great.
Questions? Now, one of the other things I wanted to share is last week I was at the Insured Tech Insights Conference in New York City. And that's where a lot of the startups go to kind of display their innovation. As you can imagine, almost every one of those companies now has AI as part of their focus. Mark and I, before this started, Mark Rogers and I were talking about AI a little bit. There's a lot of opportunities in that space. We're seeing AI for lead generation, for sales outreach. We're seeing it for customer service. We're seeing it for helping you find underwriting sweet spots and product sweet spots like the Buddy AI advisor here, if you guys have tried that. So there's so many applications for AI to make our business more efficient, right? To make it easier to do business in long-term care, that I have no doubt that we're going to see some of those taking hold in our space as well. Also had a lot of meetings just to talk about the group long-term care market. And again, because it has guaranteed issue, because you can build a really strong customer experience, we're seeing a lot of opportunities to partner with, I'll call it influencers. Let's say, you have a credit union or you have an association. Now you can get access for them to guaranteed issue products that you can kind of put through an digital education experience and have them either self-enroll or meet with a specialist to enroll. That's the right product fit for some of those high growing distribution channels. So not only is it with the employers and employees, right, where we've seen that taking hold, but we're also seeing it through alternative distribution, very high growth there. But the way that we think about that market is offering the same type of sales process or the customer journey as we see on the individual side. We just have a product that's like everything that you've always wanted from an individual product available on the group side. It doesn't mean that we're skimping on education. We're still doing a ton of marketing, education, We're still making sure that people are evaluating their best options so they have choice and they're able to shop the market. But the ability to get them a product immediately at a low cost with a great experience is really what people have been asking for and what these large channels are looking for.
It is so true, Mark, because it's a modern experience today. They're modern consumers. The generations are very different from those in their 70s and 80s who bought it, and they demand that experience. I mean, on the group side, your platform that we have, people can enroll on their phone. It's like eating pizza at 5 o'clock at night or 10 o'clock on their couch. So I think that has really we've certainly seen that on the group side. The experience, the younger people, guaranteed issue is amazing because it's so tough on the individual side unless you're completely healthy to get a policy. And even then it takes months for underwriting. So on the group side, you have all of that. And you have the portability, you have the inexpensive premium. You still have that opportunity for people to understand the solution through the education that we give them. So that's been really a huge driver. We no longer, on the group side, no longer from individuals selling one-to-one, which is always great because you really can have those really tight conversations. But you have the opportunity to help so many more families on the group side. So all of you on this call, you all know people, you all have relationships with groups or associations, and you're probably a part of those as well, to bring that to them. And associations have never had this opportunity before. So that has been, I think, on the group side, Mark, for me, what I've seen over this last year and a half, astounding to me, how many associations want to hop in.
Yeah, and I think they go hand in hand too. It's not just the sales
Mhm.
process that we're using the best of class individual approaches, even though we're using group products. But we're
Right,
seeing ways where we have these webinars where we educate thousands, tens of thousands now
yeah,
of individuals, and we can help them get coverage for their parents. We can help them get supplemental coverage on the individual market. We have some groups that give us their census, and like half the people are over age 70. And
right.
we can solve their problem with annuity products or short-term care products, but not necessarily the actively at work group products. So we're finding a lot of ways where that is kind of lifting our overall marketplace and the individual side as well. I saw there were some questions. I can't read them as well in the chat, but Wendy, feel free if you want to read
Let
them
me
out
do
loud.
that. Hold on. Okay, where'd they all go? Okay, hold on, Mark. Sorry about that.
Okay.
Hey,
And
Mark.
by the way, Mark Rogers said, One America, going back to One America, because I don't want to miss this. One America alerted me that the IRA non-spousal inheritance cases are very strong. So that's interesting for the kids, right?
Yeah, so you have some advanced planning solutions that you're seeing kind of becoming more popular. One America is one of the leaders in those. Mark, do you want to speak to that a little bit? I
Yeah.
saw you went off mute there.
Yeah, it is interesting because the Congress has changed that obviously in the last handful of years, last 4 years or so, that kids when they inherit an IRA or 401k, it's called a non-spousal beneficiary, that they have to distribute those funds over the course of 10 years. Well, so that plays well into building, having their parents help them with a long-term care plan because they have to pay it, they have to distribute those IRA funds over 10 years. So One America obviously has that capability. But more importantly, if they never have to use it or they never have to use long-term care, why now instead of giving their kids now, some kind of tax qualified funds, they're giving them tax-free funds, which is a big deal. So it's killing a couple birds with one stone. I heard that, I'm like, wow, that is powerful because there's a lot of people that are handing their kids, later in life an IRA that might be worth $300,000, $400,000, $500,000, or $200,000 for that matter, and that would play very well into a structured One America plan. But anyway, I just thought that was pretty
Yeah.
cool.
No, that is great. The annuity funding whole life and the qualified money strategies from One America are quite popular. And I'll mention another thing too, Mark. Last year, their annuity care products actually saw the biggest growth. We talked about the life hybrid a lot, but I forgot to mention that, they actually simplified the underwriting to do a 1035 exchange as well in annuity care. And that just like took off their sales. And I think it wasn't a huge risk for the company because really you were using gains in your existing contract to subsidize, right, the long-term care purchase. So I think finding those dollars, whether it's IRA dollars, whether it's existing annuity dollars, That's really key to getting people to reposition it for a more efficient use. And it's, much easier, repositioning the asset and helping the client in a win-win situation like that, I think.
Hey, Mark, I've got a question, and it's probably just as easy because you've got this on our on the group side. On the group quote, right? So are those GI or simplified underwriting? And where do we see the distinction which underwriting class there is in the group market? So could you go over to the group side real quick?
Yeah, and I think Mark, you had asked this question as well. So I saw that you were
Oh, sorry.
going to
Yes.
chime in on that. But if you toggle over from the group, individual to group, you'll see two tools, the group product buddy. So this is where you can get the equivalent of what we just looked at on the group side. So you can plug in the state. And this one will show you where the LTC rider is available, where the extension rider is available, and where the restoration of the death benefit is available. So Mark, you're being in Washington State. I'm going to choose Washington. And you'll notice these actually changed the order. Allstate is now at the lowest on this order because the extension rider is not available for that carrier, even though for a carrier like Transamerica, it is available. So Washington, we would tend to quote these three carriers, but in other states like California, Allstate is the best product. So you really have to look at the state first to see, which version of their product is available.
So where does is there, sorry, and I've been out of the group
Yeah.
space for a little bit, but when you get back in, is some of these carriers guarantee
Yeah.
issue or a simplified issue?
They're all guaranteed issue.
Wow.
Yeah. So no health underwriting. We can go down to 3 lives with Allstate, down to 5 lives with Transamerica. So you can work with small businesses. They picture a business owner just paying for themselves and 2 employees, gets you the guaranteed issue, and then it waives the minimum participation requirements. So yeah, take advantage of that. Now they do have simplified issue buy-ups, so you can get more coverage. And this group quick quote will be also the way for you to see that. Right now, one of the best deals in the market is with Allstate with California and Utah. In those 2 states, if you have a group that's headquartered there, you also have 5% inflation protection. So you can buy pretty significant amount of coverage, either guaranteed issue or a simplified issue with buy-ups here, Mark, as well. So, and that's why we're seeing so much growth in this market. There's this picture, you have large employers, especially the ones that were dealing with the Washington payroll tax, that are now offering that same benefit nationwide to all their employees. All Amazon employees, Microsoft employees, NVIDIA employees now have access to guaranteed issue long-term care just because they're employees.
Wow.
So it's just much easier. But here's the thing they're missing: education. They're not seeing high participation because nobody understands that they're sitting on a gold mine and how to really understand why they should be buying the product. They need that, that long-term care specialist in the mix to really get people to take advantage of it.
So the key points of education, Mark, on this is I saw you have PDFs up above, whatever. So
Yeah.
as far as the resources for the education are sitting in here as well.
Yeah, so what I would suggest, this is more of kind of a sales process item, is start off with your state,
Yeah.
start off selecting a carrier. Once you have that carrier, go ahead and download this PDF, like you said.
Yeah.
I'm just going to do it just to show y'all what it looks like. This is your 1-page sell sheet. You can approach an employer or business owner with this and have confidence that you'll get at least this offer from the carrier or better. So we try to quote conservatively when we're doing this process so that you can come back, under promising and over delivering on the outcomes.
Excellent.
And we chose the top 4 again out of the carriers, mostly because these 4 have extension riders, just like our individual hybrids do. But there's also about 12 carriers in this market now. So they're not all going to be listed here. Again, we work with all the carriers, try to find the best fit. But most of our cases we do with these 4 because that extension rider really shows that leverage effectively, just like we do on the individual side. It's an LTC first, life insurance secondary type of approach. Just going back one, kind of related to this, but to the InsurTech side of it in terms of where is the market headed. One of the other nice things about the group market is we can control the customer experience all the way through the application and the billing. We built an enrollment platform for all 4 of these carriers that are tied into it, whichever one you choose, where we can set up our own digital application experience for the end clients. We also are working on the billing side, so we're starting to incorporate some of the ACH billing providers, so we can direct bill clients ourselves with like platforms like Stripe and Plaid, if you guys have heard of Stripe and Plaid. In fact, Stripe and Plaid were both at the conference that I was at, the insurance conference. They have just launched an insurance team, go-to-market team, so they can get more carriers to use their platforms to do direct billing. So just thinking about the experience, right? When you go online and you shop with Amazon and you can check out and you put in your credit card, you can put in your banking information, and just making that seamless. Historically, the carriers haven't done a great job, right, of making that experience seamless. Now that we have this like true modern technology companies that are entering the space, you're going to see a lot more innovation in terms of the clients not having to wait, it didn't bill me correctly, it didn't draft correctly, I got to contact the carrier, all of that, kind of friction goes away. So that's really exciting just to see. That's another reason why we like the group side right now, is that we can have that customer experience today. We don't have to wait years for that. I think the individual market will follow eventually, but right now I think that the group side is going to lead the way with some of that technology. So I'll kind of pause a little bit. I know Wendy, you covered some of the questions in the chat.
Did.
Did a quick survey of a lot of different carriers and marketplaces here. I think the synopsis here is we had a point in time when the long-term care insurance market was at a low point in terms of people getting coverage. I think there were probably about less than 100,000 people heading into 2021 in the Washington Cares Fund. That was kind of like the lowest point in terms of new sales that we had seen in a long, long time. And now we've kind of rebounded. You may not see it in the LIMRA numbers that I showed you, but with the life hybrid and with the group space now selling more policies than the individual space, there are more people getting long-term care today, and it's on this path towards getting a very high penetration. So I want to leave you guys with a very optimistic tone, which is we see so much growth happening right now. And if you feel like you're looking to grow your business, tie yourself to one of those markets that has this tailwind, right, of high growth with new carriers entering the market. And I think you're going to find opportunities there, and we can help guide you towards those opportunities. But don't ignore it. Don't just assume, okay, traditional long-term care is all I believe in. You really have to expand your mindset. What is this policy going to do for the client, right? All the products are tools that you can use. How is that going to deliver value for long-term care for your client? That's just stick to that fundamental and you'll do really well. Sorry, Wendy, I don't know if I.
No, you did. No, that was great. And again, on the group and, on the individual side, on the hybrid, and I probably said it on this call a few times, but you still have the majority of working women out there today that don't have a life insurance policy. I mean, that's just insane that they don't. And they work outside of their home and then they're raising kids. And I always say, if I died when our kids were young, Bernie, honestly, my husband would need like 30 people to do what I do. So I think bringing on that hybrid side, and that's where it's really incredible on the group side, because women have an opportunity to like put that in, we can put that in their face and they can go, oh my God, I get a death benefit on top of the long-term care. Even if I use it or not use it, I'm still going to get a death benefit. I have a good friend of mine who passed away last year in August, 3 children. All were under the age of 17, the youngest only being 12, passed away unexpectedly. It wasn't cancer, it was just drop dead. She had no life insurance. And so she scrambled. And I see that weekly on calls that I have with individuals, clients, and so forth. So to me, it's a great opportunity. We see it on the group side in a big way.
Yeah. And you bring up a really good point, which is with the hybrid model, you kind of almost make it a no-brainer.
Yeah.
Like, what's the catch? What do I have to lose in participating? Worst case scenario is I get my premiums back as a death benefit. I mean, those types of reactions that you hear from clients makes it obvious. I think the other side of it is, am I paying extra for this life insurance feature? And the reality is you get the same LTC benefits for the dollar. You're getting the life insurance for free in a lot of these cases.
Right.
So just really how you position that so people can understand, that they're not sacrificing value or they're not overpaying or overspending for a permanent life product. I think there's a stigma attached to it, but to your point, Wendy, if I was to give you a $50,000 consolation prize, which by the way is a good consolation because you didn't need long-term care, but if you were to get the $50,000 check, I think you'd figure out a way to use that money.
And honestly, on the women's front, and we get this too, besides the life side, The unisex pricing, I mean, you can't get that on the traditional side. So when you have 52% of the workforce are women, God, when I was, what, that 25 years ago? So when I was 45, less than 30% of women worked outside of their home. Today, it's over 50%. So when they're looking at this on the pricing side and comparing it to traditional, it blows them away. And then they have the opportunity to come back to all of you specialists and go, okay, the group is great. I could only get this much. And now I'm going to stack with an individual policy. And we see that all the time. If Jason were on this call, he would be able to definitely clarify and add to that.
Yeah, yeah. And another great point is unisex pricing is on the group side, the annuity long-term care side, and the short-term care side.
Right.
Guess where we're
Right.
seeing all the growth happening? All those women who are not insured, right, who want a plan and they demand it, right? When we talk to them, they're like, yeah, why don't I have something, right? Then they're really driving the buying experience, right? They're really driving their spouses to get coverage too.
Yes.
If you're having a conversation and you don't have both, spouses in that conversation, I think you're also missing out and likely going to get derailed later, right? If you don't really have all the stakeholders, decision makers going into that conversation. So really, really great point, and I think it's, LTC 101, right? This has been the case for a long time where women are driving this conversation. But if you're able to say like, yeah, you're getting a better deal because you're getting unisex pricing, that really helps solidify them wanting to move forward.
See, it's a win for women. It's a deal. It's a sale. You like that. You like
Yeah.
that. And the majority, and we all know this on this call, and I'll probably belabor the point, but we are living longer than men. We're going to live almost 20 years without you guys, either through death or divorce. Women end up alone and they look around and go, God, where's my caregiver? And so we have an opportunity on just a big scale with employees to help all of these people out, in particular on that women's side of and you guys know this, of 10 people receiving care in this country today, only 3 of those are actually paying for their own care. The rest are relying on the caregivers, and the majority of those are women. So when women enter at 65 and want to retire, their Social Security benefits are less, the retirement benefits are less, and it makes it a real struggle for them. So we get to help them on a big scale.
Hey, Jackie, I saw your comment in the chat about your doctor clients. If you have the ability to go off of mute, do you want to share a little bit more about that?
Yeah.
If you're on mute and you can't talk right now, we understand that too.
Yeah.
Hi, Jackie.
Excuse me, I was still on. Hi, Wendy. So I visited both these doctors for different reasons, and somehow we got onto. Oh, I know why. Because my one doctor's dad went into a memory care facility.
So these are
her
two
parents had long-term
separate
care.
doctor clients that you had, is that
Two
right?
separate. They're not clients. They're truly my doctors.
Oh,
right?
okay, your doctors, okay.
Wow.
And they always ask you what you do for a living, right? So you tell them. And this is what I've known for years. So when she told me, somehow we got on life insurance. And when she told me she didn't have life insurance, I went, what? I mean, as a doctor, an owner of the business, do you hear me? An owner of this business, of which I didn't know after all these years, but she finally told me. And I was like, as an owner, you can write it through your business. I mean, this is a private practice. It has not sold to any of your larger hospitals. They are private practice. And it's like, I'm using here, maybe 5 doctors. And that place is flooded with people. No kidding you. Because they used to be a doctor for a plant here, like AT&T plant. They were the doctors for that. So guess where the people would go to? The same doctors. But she doesn't. She said her kids don't need it. And I was like,
do you think that was the real reason, or just having
no,
gotten
I
around
think
to wanting to look for it?
I think she was honest. She said she don't think her kids are grown, right?
Yeah.
I do believe she's divorced. And she said her kids don't need it. But yet she's going through this, even the long-term care. She didn't realize that you had the hybrid plans, right? She thought her partner in this business told her that, if you don't use it, you lose it.
I bet she has
said,
disability
no.
though. I bet she has disability insurance. Most doctors have that at least.
Yeah, I totally agree with her. But you're talking about a healthy person. I mean, she's a super healthy doctor. The other one is kidney doctor. And she said the same thing. And I'm like, what is it? The women in Nebraska get together as doctors and they talk about what you should have and what you shouldn't have. Now, in her mind, from a standpoint, long-term care she agrees with. But when it comes to life insurance for her kids, she said they'll spend it on a dime. So no. She said she had a client who lived in a small city in Nebraska. She had to go on dialysis. And she asked her, why don't you move to another city that she had to drive 2 hours back and forth to be able to go through dialysis? She says, why don't you move to a larger city closer to you so you don't have to do that back and forth, right? You know what the lady told her? No, because I don't want to sell my home. I'm leaving it to my kids. She'd rather this 2 hour. And I'm going,
Wow.
I agree with you. They'll spin it in the dime and waste it. I mean, these are intelligent people, right?
Yeah.
Who are doctors, have been doctors for years and are very good in explaining things to you. But when it came to how they financially do their money from that aspect, number one, she doesn't have life. It floors me that she doesn't have life insurance. Neither
It
one.
always blows me away, Jackie. I mean, we talk to women every day. I'm just shocked. But the best
think-
that we can do, right, is you just educate. And I think on that young
That's
group,
it, yeah.
educating those young women, and obviously men get it. You see the ads on TV where the two men are sitting on the stoop and they go, God, John just died of a heart attack. You had life insurance, don't you? I mean, the men like get it, right? And it should be women. And this hybrid does fix both of those really big issues for them, because women, number one concern is security for them, for themselves and for their families.
Yeah. Yeah, I think it's the education too, Wendy, right? I'm thinking about being in their
Yeah.
shoes and how would they actually learn about life insurance if they weren't exposed to somebody like Jackie who could
Right.
mentor them and
Right.
educate them. So I just think there's limited amount of education out there.
Yeah,
Yeah.
I totally agree. Especially, I hate to say it for doctors, and we know how it works for nurses, right?
Mm-hmm.
It's
Yeah,
almost it's plain education.
yeah. It's
Total
motivating for
education.
us too, because we're doing all these webinars for these groups, right? So the ability for us to be able to access those people and to teach them about long-term care and life insurance, right? That can be the first time that they're actually exposed to it, to ask their financial advisor or whoever else some more questions about it.
Even though they see it every day.
Yeah,
Isn't that
yeah,
interesting?
yeah.
They see it every day in the
But they
medical
also have to
field.
deal with
Okay,
insurance companies every day, so there could be something there too.
Hmm.
this is true. They're providers. I never understood that till my daughter taught me that in regards to being a nurse, of dealing with the different, carriers and companies, but still they see the patients, majority of them, see the patients every day and what they go through and families. Yeah,
Mhm.
interesting.
Interesting. Thanks for sharing that, Jackie. I see, Norma, you had also kind of a similar story with doctors. So it sounds like a very common theme. And I think it's because they're so busy too. Just think about how busy doctors are and how much time do they have to get this type of education. So I have a feeling that that's a big part of it. We're doing a lot of these guaranteed issue products for doctor and dental associations. And the fact that they can actually self-enroll and sign up and do it quick and easy is probably the biggest advantage for them, because then they can go back and do their into their busy lives, right? If we were to take them through a 6 to 8 week process, they probably would never get it done.
And it's interesting on that, Mark, that we found with the webinars, there's this window, 30 to 45 minutes is the only attention span that a doctor and a dentist or a vet is going to be able to give you. So these companies, these businesses, these advisors and BGAs have really worked to create, here's the window that you guys can come in and give the webinar. And then it gets right on the money. Otherwise, Mark, we probably do them 2, 3 in the afternoon and they're like, no, not at that hour. They will not go on at that hour. So that's, again, it's getting to know the client, right? Getting to know what works for them.
Absolutely. All right. Well, I know we're kind of getting past the kind of the top of the hour for the session. We're getting close to it. Thanks all for all the questions, all the engagement today. Anything, Wendy, you want to leave everyone with before we
No, I think we covered it. I'm always so proud. I'm not on these calls very often. I'm on the Thursday group call, but I just love everybody on this call. You go out and fight that fight every day, and you have people tell you no every single day. No, I'm not interested. No matter how we position that value, there's people that just are going to get it and not get it. And I've always said in my career, I can't save everybody. I can't, but I'm going to help as many people as I can. And I think for me, it started with family because my dad needed care. Easiest sales I have, and I'm one of 7 children, were my 6 siblings because they went through that show with my mom and my dad. So they understood the value. And you guys know that's what you talk to your client about first. We are all bound by the stories that we share. For every statistic out there, there's a person, there's a family. And for every single person that's out there as a caregiver are struggling with their professional lives, their personal lives, trying to figure it all out. And you guys come in and help them with that. So I really admire and respect everything that you do.
Yeah, appreciate it. Thanks everyone for the time today, and we'll talk to you all on the Thursday group call or next Tuesday on this individual call.
Sounds good. Bye,
Yeah,
everyone.
Bye, everyone.
Bye.